What is going on, guys? Early start to the day. Well, actually, it's not that early. I went out last night and, in a rare event, stayed out till like 4 in the morning. This is New York after all. As you can see, it's raining today. The first day that it actually started raining since I've been here. So I hate the rain, as many of you might know, but yeah, I guess it's nice for a change. I'm on my way to get a quick workout in at the New York Sports Club. Start my day off right, but first I got to get some coffee, so I'm actually looking for a coffee spot while I'm walking along the way, and then we'll see what the day brings us after that. All right, guys, see you in a bit. All right, guys, I just got done with my workout. As you can see, it is crazy storming outside, dude. I am not used to this. I'm actually dreading going outside, I swear to God. All right, anyway, so there is a Shake Shack at the bottom of this gym. And for those that live in the US, there's this ongoing debate, East Coast versus West Coast, Shake Shack versus In-N-Out. So I'm about to go try Shake Shack for the first time and compare it to In-N-Out and settle this debate once and for all. And I should have probably said at the start of that, Shake Shack and In-N-Out are burger joints.
Call me back.
All right, guys, here's a moment of truth. I'm about to bite into my first Shake Shack burger and compare it to In-N-Out, actually. The bun is definitely oilier. The meat itself is oilier. It's really salty. Maybe my California bias is showing, but I take In-N-Out over this almost any day of the week. Solid burger, though. I would never wait in line for it, though.
What is going on, guys? So I'm back from my workout. I did the Shake Shack versus In-N-Out test. Follow me on Instagram stories if you want to see stories and pictures from my travels and trips that I don't always post to my YouTube, because my YouTube channel is mostly focused on financials, stock, and crypto trading topics. So I'm going to be continuing about my day. I still got to talk about the market, the subject that I wanted to talk about. I got a meeting to run to. I have to go pick up a couple of gifts for some people as well. And I'm probably going to spend the rest of the afternoon working in the lounge that's in the hotel. There's a really dope lounge downstairs with a full bar and a great workspace. A full bar never disappointed anybody. But first, I got to figure out how the hell I'm going to be traveling today, whether mostly on foot or taxi or subway. It's raining like a motherfucker, and I probably need to find an umbrella. So let me start by doing that first. All right.
Oh, wow, I can see my breath. I don't know if the camera's catching that. But it is a little too cold and rainy outside, so I'm in here in this little gazebo, or whatever the hell this is called, a shed of some sort, which is actually kind of dope. But the topic that I wanted to talk about briefly today was, what I hear this discussion on Twitter, on the Discord, on the social media, crypto social media in general. What is going to happen when we see a market recession? What is the effect that is going to have on the crypto market? Now, I actually don't think that there is really a connection yet between the crypto market and the stock market, only because the crypto market is so young. We haven't even had a real recession or bear market, since Bitcoin has been created. Around the time 08, 09, we had the stock market crash, but since then, we've been on this massive bull run. Here you'll see the stock market crash following the housing crisis, in 08, and then we started climbing out of that in 09, and we've been on almost a 10-year bull run since. Now, we did have a lull in 2011. There was a bear market, and the way that it is officially denoted is, a period of at least 20% drop, at least a 2-month period of a 20% drop or more. So we did see that in 2011. And oddly enough, the price of Bitcoin in 2011, if you go to the historical record, this was the top of the first bubble, right? It went up to $31. It went from $1 just a couple months before July to $31. So 31x in 2011. That was the top of the first bubble. Of course, we all know after that it went back down to $2. So yeah, that is, we don't have enough historical record to determine what's going to happen. What will the effects of a stock market recession or global recession have on the crypto market? A lot of people on crypto Twitter, whether they're serious or not, I don't know. I'm sure some of them are, but they're saying, or I should say hoping, that people will pull their money out of the stock market because of how bad it's crashing and put their money in cryptocurrency. I mean, really? Like, really? You really believe that? Now, we do have that, as I said, we do have that one event in 2011 where people put their money in Bitcoin, and Bitcoin is kind of seen as the gold standard or digital gold as it relates to cryptocurrency. And because it does have a finite amount and it is deemed the gold standard, I could see if you make a case that, there might be a spike in interest in Bitcoin or in volume in Bitcoin. We do see that actually in third world countries where there is a genuine interest in Bitcoin as the currencies of these countries are falling. But whether the crypto market is going to see an injection of cash that is pulled out of the stock market, I don't know that stock traders who don't want to lose money are going to pull their money out of stocks and put them into the crypto market as a way to hedge their investment. That just doesn't make sense to me. Now, if there are speculators that are speculating in, that decide that speculation in the stock market is more profitable, fine. But that the bulk of the, whatever the stock market consists of, $7 trillion or something around that the bulk of those investors are going to take that money and put it in crypto? No, that is probably not going to happen unless, the crypto market sees a surge that surpasses what we saw end of last year, and a consistent one. Now, Bitcoin, again, like I said, you can make a case for it, but don't bank on it. This whole pipe dream of the institutional investors, when is the institutional money coming in? This is where this comes from. It's just hopium. It's just a pipe dream. While it would be nice, I don't think it's realistic to place your bets on that happening. And the chart that I have up here, this is just the S&P 500 price to sales ratio, so the price of the stock against the sales of the companies of those stocks. This is the highest that it's been since the dot-com bubble. You'll see here, this is 99-2000, which was the start of the major crash that we had from the dot-com bubble. And we are now at the highest price to sales ratio on the S&P that we've seen since the dot-com bubble. And then, as I showed you before on TradingView, here's the S&P 500. This is the chart coming out of the '08 crash. We were on almost a 10-year bull run. So a lot of analysts are saying that we are due for a bull run because a bear market or a recession, even worse, because this is the longest bull run that we've had in so long, plus a bunch of other economic indicators related to housing, etc. So I just wanted to provide that perspective that, don't bank on this pipe dream of investors pulling all their money out of the stock market and putting it into the most volatile market that has lost 90% of its value almost overnight. Don't bank on that. All right, talk to you guys soon.